There's been a lot of negative sentiment surrounding the trade desk stock with the news with Amazon entering the competitive landscape and the stock price down more than 66% year to date. So I wanted to provide some positive news, some positive developments for the trade desk stock investors to offset some of the negativity you've probably been seeing in this stock year round.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the things I've liked about this company is the ability to innovate in its category to deliver better return on ad spending for its customers. Since launching one of its newest innovations, which they're calling Coquet, this new service has delivered on average 26% better cost per acquisition, 58% better cost per unique reach, and a 94% better click-through rate compared to their previous generation product they called Solimar. And so these kinds of innovations improve the return on advertising spending, which brings customers back to the trade desk and increases the budgets they allocate to purchases via the trade desk. And so this is a competitive advantage for the trade desk, not just this particular program or product that they launched, but their continuous ability to innovate and serve their customers to improve their return on ad spend. That's what really brings marketers to the table is if you can deliver a return on ad spending that's above their cost requirements, that's above their threshold for what they need in terms of the return in order to justify the spend. And if you can deliver above that, they'll continue allocating their budget. They'll increase their advertising budget, and especially if you're helping them generate more sales, that increases their revenue. And many companies have their advertising set as a percentage of their revenue. For instance, Chewy, the e-commerce pet retailer, I know that management team has reiterated that its goal is to have 7% of its revenue as its advertising budget. So if it generates, let's say, $100 billion in revenue, which it's nowhere near that level right now, it'll spend $7 billion on advertising. That's their policy. And many companies have a similar policy. It might not be 7%, it might be 3% or 2% or 5%, but it's connected to their revenue. So if the trade desk is helping companies improve their revenue and their percentage allocation to advertising is connected to revenue, that delivers this positive virtuous cycle where the trade desk helps companies increase revenue. They like the results and they increase their budgets with the trade desk because their advertising policy is a percentage of revenue, and their spending on the trade desk further boosts their revenue, and they keep coming back, and on. That positive virtuous cycle can lift the trade desk revenue long term. Another innovation they launched is what they're calling Deal Desk. So not only does it facilitate the buy, but using AI, it predicts how a deal will perform relative to the open market. And this enables them to do deals, but also gives them the unprecedented data to avoid bad deals. So far, deals using this platform they are calling Deal Desk are performing about 35% better than those running on Solimar, which is their previous generation model, which is more similar to the way they run elsewhere in the programmatic ecosystem. Furthermore, in the fourth quarter, they announced 3 additional product features and upgrades that'll be some of the most significant contributors to their growth for years to come. The first is a system upgrade, and the other 2 are product launches. Secondly, they're introducing trading modes. This is a bit like driving modes in a car. So this gives advertisers the control to choose the level of control they wish. So it asks them what they prefer to have more control, where they have more decisions and a greater burden of work, or would they prefer to simply optimize the performance and lean on the machine. So imagine you're a marketer or you're an entrepreneur running your company. You get to choose whether you want the machine or the algorithm to make decisions on your behalf on allocating your advertising budget, or you can choose to have more control and go in several times per day or maybe once every day and see what the rates are for advertising, meaning like what are you getting in terms of cost per click or cost per acquisition? And based on what you're seeing so far early in the day, you can adjust your budget based on what you're seeing in those key metrics like cost per acquisition, cost per click, cost per view, etc. These are some of the things that advertisers look at when they're trying to determine the return on advertising spending that they're seeing. They don't just connect to the cost per sale, they look at some other details as well. Things that lead to a sale might also be of importance. And do you want that greater control? Which, of course, if you want that greater control, it also means more time you're spending on that platform, right? You're logging in, you're looking at the data, you're evaluating the data, you're making a decision, and all of that takes time. And if you're doing that every day, that's time out of your day. And if you're an entrepreneur, you should know, and you probably know, that time is of the essence. You probably have a lot of things to do and not enough time to do them. So is this something that you want control over, or is this something that you want automated with the trade desk? In any case, having the option is a benefit, and entrepreneurs value having that benefit. So they also introduced a new product called Audience Unlimited, and this enables their users to use third-party data for a single fee. That'll make it easier for them to layer on much more data and improve the efficacy of their campaigns. So you think of this as like, for instance, you're making advertisements and you're trying to evaluate the return on your advertisement, but there's a piece of data that you're missing that makes it more difficult for you to evaluate your advertisement. And you can go on into this marketplace and purchase this third-party data for a fee. So what it might be data from Visa or MasterCard that shows transactions for a certain category, or it might be data from Adobe or someone else that reports certain kind of data that you want to incorporate into your own data models in order to determine if your advertising campaign is having an impact. So those are some positive developments for the trade desk. I know a lot of the discussion surrounding the trade desk has been Amazon's decision to launch its own competing service and the trade desk changes at the leadership positions and the company's significant stock-based compensation. A lot of negative sentiment surrounding the stock. That's some of the reason why it's down 66% year to date in 2025. But given the recent stock price sell-off this year, it's been one of only a few times. In fact, this is the first time in 2025 where I rated the trade desk stock as a buy starting in April when it dipped around $50 per share is when I initiated a buy rating on the trade desk, which is the first time since I started following the company that I rated the company as a buy, and I also bought shares for my own portfolio. So I do see this as a buying opportunity. It comes with greater risk, to be sure, but it's trading near its 52-week low for $38. The intrinsic value per share, or the fair value I calculated, is $65. And when I look at the market multiple valuations, they also look ridiculously cheap at a forward PE of 20 and 17. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.